What's up, YouTube? This is Atticus from The Complete Trade, and today we're going to be taking a look at Bitcoin. So right off the bat, our medium-term target at 80K and long-term target at 175K still remain unchanged. If you want to see how we calculated those price targets, go check the previous Bitcoin episodes. For the short term, I'm personally flipping bearish with a short-term price target anywhere between $31,000 and $36,000. Currently, Bitcoin is stuck in between a rock and a hard place. In last week's Bitcoin episode, we did come to the conclusion that if we hold above 40K, we would have a shot at higher prices. Well, on last Sunday night's flash crash, Bitcoin did bounce off our white demand trend line, as well as the 20 daily moving average in yellow. So what has changed since last week? Well, for starters, the 2-week candle is about to close in just a few hours. On the 2-week time frame, Bitcoin is printing a potential topping tail pattern. The topping tail pattern becomes a lot more evident on the Bitcoin against S&P 500 valuation, much clearer shooting star candle on this chart. Moving over to Ethereum, we have a gravestone doji on the 2-week time frame. Last time Ethereum printed a gravestone doji on the 2-week time frame was back in April of this year, and Ethereum proceeded to correct almost 30%. Additionally, shifting gears to the weekly time frame, we have a 9-count sell signal on the TD sequential indicator. I know this is a Bitcoin episode, but because Bitcoin and Ethereum are top 1-2 in the crypto industry, one will usually follow the other, and the bearish signals are much more evident on the Ethereum chart. Even though we are anticipating a correction into the mid to low $30,000 region, we are not selling any Bitcoin, and the simple reason is that short-term price action is just noise. The correction is simply a buying opportunity for much higher prices. As stated a few seconds ago, our medium-term target at 80,000 and long-term target at 175,000 remain intact. Moving into the Elliott wave count, I did modify the short-term wave count a little bit because when I was experimenting around with the trend-based fib extensions, I found that Bitcoin got rejected at the 3.618 trend-based fib extension, which is a common target for a wave 3. Now, because of the short-term bearish signals we showcased just a few seconds ago, I am in favor of wave 4 in minor degree unfolding right now. Now, taking a Fibonacci retracement, wave 4 in minor degree should bottom anywhere between $31,200 and $35,800. So pretty much in line with our short-term price targets. Very similar to the Coinbase video yesterday, we believe the best decision at the moment is to just either hold or take some money off the table and move your stop loss to break even in order to protect your initial capital. The worst decision you can make right now is letting your emotions take control of you and follow the crowd, FOMOing in at higher prices. Just be careful. Bitcoin is in the golden window resistance area between the 61.8% Fibonacci retracement at 39,000 and the 78.6% Fibonacci retracement at $50,000. If you're purchasing crypto assets at today's elevated prices, just make sure to balance your risk accordingly. Don't over leverage because as we saw last Sunday night, over $300 million in longs got liquidated in just 1 hour. Moving into the S&P 500, the Fed has forecasted several rate cuts in 2024, so the Fed pivot is pretty much a guarantee in 2024. As we spoke about since episode 1, our price target for the S&P 500 when the Fed does pivot span between 4,800 and 5,100, which is the 0.618 to 0.786 trend-based fib extension, aka the white shaded region. Just a side note, this was something that I found was quite interesting this week. So apparently, Jim Cramer is on record last year saying that it's time to buy stocks when the Fed pivots. Not going to lie, historically speaking, not only does Jim Cramer stink at his job, but the Fed pivot has historically been one of the most bearish signals created in stock market history. Closing things off with some regression, just a quick overview of this indicator. The red region represents Bitcoin's overvaluation, the green region represents Bitcoin's undervaluation, and the blue line represents Bitcoin's fair value. The concept of this indicator is quite simple. You buy in the green and you sell in the red. As stated before, the real fun in the cryptocurrency markets begin when Bitcoin can blast past the blue fair value line, which is currently at $36,142.89. Bitcoin's overvaluation region this week spans between $62,568.17 to $120,607.37. Should Bitcoin have a short-term correction, I believe Bitcoin's blue fair value line will hold as support. Now, I know over the past few days and weeks, the old cryptocurrency veterans have come out with their new bull market price targets. Plan B is saying that Bitcoin is going to $500,000. Listen, even though Plan B is a well-respected individual in the cryptocurrency community, the red overvalued region of the regression bands have always caught the bull market top. And even though the regression bands move higher every week, these regression bands aren't going to $500,000 for the next few years. I don't care how many Bitcoin ETFs get approved. This reminds me of the former Coinbase executive saying that Bitcoin is going to $1 million in 90 days earlier this year, and that never happened. And I don't believe Plan B's prediction will come true either. We're standing firm on our long-term target at $175,000. Listen, should Bitcoin correct over the next few weeks, there's going to be a lot of buying opportunities across the board. So I hope you guys have some spare powder on the sidelines, because 2024 is going to be a very, very wild year. Anyway, that's my analysis on Bitcoin for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.